Right, so quick story. There was once a time when my trades looked like charity donations to my trading broker. And I tried multiple different entry models. I learned all the concepts and I still ended up doing the break-even dance on my account and consistently ended up failing my prop firm evaluations. But I didn't give up. And eventually I stumbled upon this one simple entry model. And since then, I've been consistently pulling in over $20,000 per month. And there's a specific reason for this. You see, the entry model I'm about to show you right now is designed to help you avoid unnecessary losses, and it even turns losing trades into winning ones. And in this video, I'm gonna show you the exact step-by-step entry model that I use to generate upwards of $20,000 per month, so that by the end of it, you'll have all the tools to be able to test it for yourself, get funded, and become consistently profitable as well. However, to be profitable trading this entry model, there is one rule that is so often totally overlooked. And if you skip this, you won't be profitable at all. So let's get right into the strategy. The first thing I wanted to show you is that this actually works. It's actually made me money. I'm not just blowing smoke up your butt. It works. You can see here, I made $26,000, right? Trading this last year in 2024. You can see here another $16,000 a prop firm withdrawal. You can see here that even this month I did $7,500 just with this prop firm. And then I've started implementing it with futures as well. And these are all funded accounts that I am running on my copy trader. And I had a $25,000 day with futures trading in Q. So you can see this actually works, and I'm showing you this for a reason so that you take notice and listen to what I'm about to show you, because it is very, very valuable and it's extremely simple. So what we trade is the 5-minute breakout. You can trade this on multiple different instruments, but I personally like to trade it on the NASDAQ. Many people in our community are trading it on Forex pairs as well, and some people are also trading it on German 40 in London or Frankfurt session. So what I personally look for is for the opening of New York session, which is roughly 9:30 Eastern Standard Time. Once that happens, I'm looking for structure. I'm looking for pivots, okay? I'm looking for price to have a significant V-shaped reaction in a certain area, aka a pivot. And then I'm looking for another candle that reinforces that this is actually a significant zone, and I like to call it the friend candle or companion candle, right? So you can see we've got a pivot or a V-shaped reaction happening in a similar zone next to each other, right? Over here. So we mark that out with this zone, right? We mark that out on our chart. Then what we're waiting for is a simple breakout of the zone, but we want to make sure that it's a break and closure, okay? That means that the whole 5-minute candle needs to break out and close above. It cannot just wick above and then close down here, right? Because that to me signals that we've rejected this and then we're more than likely going to continue going downwards, right? So once it breaks and closes above, okay, we can then start to look for price to come back down, retest our zone, and then push up, okay? And at this point, you have a choice. You can choose to either get in with a 1-to-2 risk-reward ratio, okay, which basically means if you're risking $100 and your stop loss is worth $100, you're going to make $200, okay? And a lot of people like to do it that way, and I did it that way for a very long time, and sometimes I do take a 1-to-2 risk-reward ratio. It depends on your psychology and risk tolerance. Some people like to win more when they win, and other people like to win more often, okay? And for those people that like to win more often but win less in terms of amount when they win, you can also do a 1-to-1, basically meaning that if you risk $100 and your stop loss is worth $100, your take profit will also be worth $100. And obviously that continues on depending on the lot size or contract size you use, right? Depending on if you're using this on futures or on CFDs. You can use this on futures or CFDs. You can use it on Forex. It works on anything, right? It's up to you to test it out. And this is my preference, right? So this is essentially the whole model in a nutshell. Now let's dive into a little bit more detail. How do I identify these pivot zones that I showed you? I'm going to show you that in detail right now, and the specific criteria that I look for. So we're looking for significant V-shaped reactions or pivots. You can see that right here, price pushed up and reacted, right? You can see here, price pushed up, reacted. You mark it on the chart. Price pushed up, reacted. Mark it on the chart. Price pushed down and reacted as well here. So I like to start where price currently is and then look at all these different zones, all right, and mark them on the chart. Then when you look on either side of where price is right now, you can see that this is a significant reaction here, okay, right here. And then you've got this one right here as well, okay. This one here would be the initial pivot, and then this one here would be the companion candle, the friend candle. We're going to then mark from the top of this candle to the body of the companion candle, and this then becomes our breakout zone. We would then be waiting for price to break above, retest, and then go further. All right. So what I then like to do as well is measure the space from zone to zone. As you can see from the top of our zone that we just marked out, we've got pretty much fully open air. And if we look at the lower zone below, you can see that we've got multiple pivot zones, one here, we've got one here, and then there's one down here as well. But then you've got a companion candle right here. Okay, so we ended up marking out this zone right here from this pivot to where we currently are right now. And you can see that we currently actually have quite a bit of space there as well to trade. Now, how do I judge this? So for example, generally our stop loss is going to be roughly around 30 points on NASDAQ. Again, that's going to differ from pair to pair. You're going to need to test what works best for you and collect data on that. But for NASDAQ, I like to use between 25 and 30 pips or points. And basically, as long as I can get a one-to-one, I'm happy. So essentially, if I enter in here, stop loss here, take profit here, we can get a one-to-one if we've got a 25 to 30 pip stop loss, right? Hope that makes sense. So let's have a look at some examples on NASDAQ or NQ. So here's a setup here that happened. Once again, we've got one hugely significant pivot that happens, and we've got a companion candle. So here's the first pivot, and here is the second one, which is the companion candle. We then draw from the top of that to the start of that zone. Again, you could also drag it to the bodies like we have previously. It's up to you. The most important part is the extremity, right? As long as that's covered. Now, this would be where price opened right here. Okay. And then you can see that it broke out over here. Just the top peaked out. Okay. And that is our breakout. And we can then start to look for entries as price comes back to retest. And you can see here was the result. It broke out, it retraced slightly, and then it pushed to our target for a 1-to-2 risk reward. So that basically means whatever you're risking here, you're going to get twice as much when we hit take profit. But the most important rule of this strategy I have not yet disclosed to you, and that is that we don't want to catch a falling knife when we're trading breakouts. What does that mean? When price gets overextended, there is a chance that when price comes back down to your zone, that it's going to build momentum and push straight through your stop loss. Okay, how do we judge that? So if we enter over here, okay, if we are looking to enter here and price has already pushed past this and hasn't tagged us in yet, and our take profit was up here, okay, meaning this would be at a 1-to-2 risk reward ratio. So our stop loss would be somewhere down here. Okay. Now, if we get all the way up here, and you can see that we've really overextended ourselves here. Okay. If we look at the price movement here versus this huge extension, we've really overextended ourselves. And now when price comes back, it doesn't correctively come back. okay? It just creates, like, for example, two large bearish candles like this with some significant momentum to the downside. That is classic catching a falling knife. Or if price has pushed really far past our zone and then starts to move back with significant momentum. It's like if you throw one of those metal bearings in the air and you throw it really high up, you're going to struggle to catch it. You're going to probably want to like dodge it, because if you try and catch it, you're most likely going to hurt your hands. But if you take that same metal ball and you throw it in the air, but you only throw it maybe like 20 centimeters in the air, it's going to be fine to catch. And that's what we want to do. We want to catch a continuation. We're not trying to find, have price already choose a different direction, come back to our zone, and then try and catch a reversal, because we're not trading reversals, we're trading continuations. Now, here's when it's okay to enter right away, okay? And actually, I wanted to show you something else real quick. What we do in a situation like this is when it is coming back with significant momentum, and let's say we're wanting to enter at the zone right here, if it comes back and pushes with one big candle, right, like this, what we're going to want to do is wait for price to just continue to push, continue to push, continue to push. And eventually what it's going to do is it's going to start to reject and leave a wick like this. When it starts to leave a significant wick, okay, where it's clearly rejecting a zone, for example, let's say it's taken liquidity here, it's swept this low right here, and you can see that that is where it's starting to react, and it's starting to wick, okay, it's starting to reject significantly. You can then look to get in over here, okay, and in some cases, it would have already taken out our stop loss. So let's say our stop loss is here. It would have already taken out our, where we would have put our stop loss, okay, and then it starts to reject, and then we can get in once it's taken out everyone else's stop losses, all right? That's the beauty of that entry, and I'll show you that in just a bit. So when it's okay to enter right away is when it's not overextended. So you can see here, in relation to this price action, this is not a super huge move. And when it came back to retest, it was corrective, basically meaning it had some red candles and some green candles. It was going up and down before it eventually came back. It took a little while to get back. It didn't just go straight down to our zone. And if we're sitting there waiting for some time, when it taps, you can immediately get in, right? And that is how you play out that scenario. So scenario one, when we enter straight away, like I was just telling you right now, you can see here's our zone right here. It's been testing multiple times. This would be the original pivot. Here's a friend here. Here's a friend here, all right? Price then eventually breaks above. And then you can see as it comes back, it's literally doing this, okay? It's literally doing this. It's not one big red candle like this coming back down to the zone, and that's when we would want to pause and wait for a rejection. But in this case, it's literally taking its time to come back, okay? So let's have a look at when we might want to wait. So you can see here, based on this, we push aggressively up. We're overextended. We're almost at where our profit target would be, and then price makes these huge full red candles, right, that come down aggressively, and we would then want to wait, all right? We would want to wait for price to start leaving a wick. This is a very small wick in comparison to these bodies, so I would want to wait for it to push a little lower and then eventually leave a wick, and then you can get in, right? That is exactly what I would be looking for in a scenario like that. And what that actually does is it turns losing trades that would have lost. It takes everybody else out at stop loss, and it turns those trades into winning trades. So now that you understand that concept, let's have a look at some more examples on NASDAQ or NQ. So we also have a look at the 4-hour resistance as well. We want to make sure that we are within that. Okay, we want to make sure that we're not trading into 4-hour zones as well. Again, very similarly to the way that we mark our 5-minute zones. If you want to have a look at that, I've shown that in previous videos. Then you can see the zone that we're trading on. So we push down, react, okay, and then we have another reaction, okay? So here's our friend candle, here's another friend candle, here's the original pivot, all right? So that is our setup. Then you can see we break out of it, okay? We come back, okay? We take a little while to come back. We get in, right? You can see here in this particular setup, this is quite an aggressive candle, so we may have wanted to wait again. This does reject, and so we could have gotten in on this rejection right here. Okay, and in this case, it actually comes and pushes a bit further back before then going to our target, right? Then here's another setup. We had basically price push down, okay, create a pivot here, and then another friend candle here, right? Then you can see that over here, we also had a pivot, and then we had a friend candle up here, okay? We took the trade as we broke shallowly above the zone, and we're trading again between these zones, right? So we would have waited at the open for price to either break out over here or break out over here. Obviously, we broke out over here, price broke and closed, and then we took the trade off of here. A very shallow break again, so we're not catching a falling knife, which is exactly what we want. So that's exactly how it works. And what I've done is I've created a free daily analysis live stream group that you can join on Discord. You can click the link in the description, and you get access to my free breakout trading course as well. That's completely free for you to use. It goes through everything that I just showed you in even more detail. So click the link in the description. You'll be able to join the community, and you'll be able to see my live daily analysis and live streams. So I'll see you guys in the community. Thank you very much for watching, and I'll see you in the next one. Cheers.